What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We do have our broad market, we have our core list of companies, and this week I have 5 trade ideas to share with you towards the end of the video, so certainly stay tuned for that. Also of note, the market will be closed on Monday for the holiday Labor Day here in the States. Take the time off, take the time away from charts, get a little bit of a refreshed perspective, then let's come back and hit it hard on Tuesday at 9:30. Hopefully I'll see you in the Discord. It's completely free to join and linked down below in the description. That being said, let's jump into the charts. Kicking things off with our SPY weekly chart, talking about candle structure and location as we always do. You can certainly see for structure a smaller bodied green candle with a small upper wick and essentially no lower wick. After, we haven't seen this in quite some time, essentially is what I'm getting at. The last one was maybe right down here. And in terms of what that's telling us, things are still definitely bullish here, but they're not as bullish. There's not as much range expansion. I would say this is actually range compression. We will see that on the daily in just a moment, but nonetheless, still bullish price acceptance as opposed to, downward activity, which brings me to my next point, which of course is going to be location. If we do something like this, you can certainly see that all of the activity happened above the prior week's range and at all-time highs. And again, that just has to be simply bullish. If we look down below at volume, nothing to really write home about here, on par with the prior week, on par with prior weeks in here. So again, nothing really jumping off the page from that perspective. In terms of what we're doing here though, let's again remember that we've been talking about this for some time now. If we do this and draw in a resistance trend line from the weekly perspective, we're now starting to poke up above that. So do you really think that now is the time for new risk-friendly longs? I would start to argue not so much, but that brings up the flip side of the coin that we're also not hunting for market tops, right? Whenever we're in aggressive bull trends, we just want to buy pullbacks. And the reason we know we're in an aggressive bull trend is if we look at this support trend line, we're still far above it, right? Never even coming close or into question as of right now. And if we do something like this, grab coming in from our pivot low here, and connecting some of the dots like this, remembering that our anchor or, first touch is here, anchor is technically here. First touch, second-ish touch in here, third touch definitely here, fourth-ish touch right there. So in terms of the uptrend on the weekly, again, everything still remains intact. Nothing has changed from that perspective. And I wanted to continue to echo that point because essentially, as we just said, nothing has changed, right? Not trying to time a top, instead looking to be a buyer of pullbacks in an aggressive bull market. Let's take a look now at our daily time frame chart and some tradable levels into the upcoming week. We'll turn our levels back on here. And what you might notice is this red box on the chart. And let me just walk through with you on how we arrived at that red box and what it means. If you've been watching the midweek market update, you might know what I'm talking about or what I'm about to discuss. But if we do something like this and just go in from where our pullbacks are happening and sort of bottoming out, doing that, you can certainly see, and again, all I'm doing is picking this low here, coming into this one right here, and this one right here. You can see that we have this range, and if the market's going to keep up this sort of symmetry or, sort of rhythm that it's been in for some time now, then the next reasonable area for that to happen would be in that red box. And let me give you some dates here. Let me clean the chart back up. Of course, that box is going to be much cleaner than those hoops. Those are from 9/13 to about 9/22. And if you watch the midweek market update, this is more of just a theory. I'm not arguing that the market has to pull back in this red box. It's just something I'm thinking about and keeping in the back of my mind. In terms of tradable levels into the week, though, this is going to be very simple. The market essentially went nowhere this week, kind of sideways, grinding around. Now, don't get me wrong, the range was still $2. There's some good scalps to be had intraday. And again, this brings me to another point, which is don't confuse risk-friendly longs from the weekly perspective as meaning no long trades, right? You can certainly scalp this to the long side. You can do that all day long, and that's what I do with the ES futures, right? So back to the point, though, we're just going sideways, right? And this strikes me as healthy bullish price acceptance in this area. If it was more bearish, prices would have rejected underneath 450.75 when we came in for that test here, but it simply held up, right? So now we're in a period of balance. So we're going to apply balance rules. If we get a breakout of this range, which we have now put in something like this, we're looking for a move higher, and it just coincidentally lines up up with the top of that red box. That's for no reason other than, again, just coincidence, but that number looking right here is right around 455.75. That would be a bullish upside break target if we get follow through to the upside. Again, it has to stem from a move over 453, the round number. If we remain inside of the consolidation, something like this, you're probably just scalping off of the lows and selling up at the highs in reverse, right? Shorting up at the highs and covering down there at the lows. That's how you would just play balance. And the downside brings into a different perspective simply because that would be proving all of this to be overhead supply. So a break underneath 450.75, sure, it could technically do the range double as we typically talk about, but really, I would argue 447 is the next number to watch out for to provide some sort of support. Now, are we buying this dip? I would wait, right? I would really wait to see if we get a 50 SMA touch once again and see how 447 resolves. Because if it does not resolve, it's going to open the door to lower, essentially the gap fill between these two yellow lines, 445.14 down to 443.71. So those are the scenarios I'm watching out for here in SPY. As it sits right now, from the weekly perspective, we know it's bullish. We also know that we're not trying to time a top, so we're not really trying to short this. But if it does break down underneath 450, we would be buyers of pullbacks, likely into 447 and or the gap fill area. If the 50 SMA coincides for a super support, all the better. Remember, the red box is just a crazy theory I have in the back of my mind. Don't read too much or too little into it. It's just something I'm thinking about. Taking a look now at the Qs, you can see that we have something similar, but a little bit different. In the S&Ps, we had 5 days of consecutive sideways balance, where here in the Qs, Monday was a little bit more initiative, right? So all things considered, it's just a slightly more bullish, the fact that we had an initiative day on Monday instead of just sideways balance the entire week. All things considered, though, again, we have a top of balance at 382.34 and a bottom of balance at 379, we'll call it for round numbers sake. If we get the breakout higher, as you know, we're just looking for a range double. If we do something like this, that could bring us into potentially 386 as an upside target. Monitor for continuation after that. If we remain in the box, of course, that box just being defined as this, that's healthy price acceptance here. Don't try to short it. Wouldn't try to short that as a market top. And again, only if we break down under 379 is there possibility that we come down into some prior targets. So underneath, we'll be looking at 376.23, and after that, 372 or 373, we'll call that here for round numbers sake. That's really going to be the gatekeeper for a 50 SMA touch. Again, just remembering that the S&Ps have that sort of symmetry and rhythm going on. The Qs don't really have that so much, right? This is what has been much more bullish and hasn't seen that, move higher, pullback, so on and so forth. So I'm not really anticipating that there's any time frame that happens in. We're just going to wait and see how price unfolds, but do know that the gatekeeper, as we mentioned, is 373 ultimately for a 50 SMA touch. As it sits, still looks bullish, still looks healthy. Consolidation at the highs. Can't really read into that too much more other than saying price acceptance, looking for more upside. And last but not least, we have IWM Russell 2000 and our small caps, and things still remain the same as they have for quite some time now. Here's your range, as you know, and certainly we are moving away from the 50% of the range, which of course is more bullish than bearish, but it's still just neutral risk. It's not aggressive risk on until we get out of this box to the upside, and it's not aggressive risk off until we break down and out to the downside. So all things considered, some scenarios to watch out for here would be if we do make it all the way to the top, I would love to see a higher low pullback, something like this, and if we retest again in a short proximity of time, a breakout here could really send the S&Ps higher. Think about that. All of this energy and all of this sort of neutral risk that's been sitting here for now almost, however many months this is, 6 months, half a year, if it starts to see price acceptance higher, that's a lot of energy that should be released in that direction. So please keep an eye for that potential scenario to unfold and then subsequently push the entire market higher. But as it sits right now, that's sort of reading into the future, right? But as it sits right now, again, what is this telling us? Neutral risk inside of the range, not all the way at the top yet, and that's completely aligned with everything that we just discussed in the SPY and the Qs. We're not fishing for a top, and we're also not, aggressively buying new longs based on those charts locations. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping right into our Apple chart to kick things off with our companies, the main thing I'm watching for here is a potential break up and over 155, the round number. Now, why is that? Well, if you ask that question, we're just basically looking at, inside consolidation ever since Wednesday, and we're just going sideways here. So all things considered, digesting this move here, putting in a micro bull flag. The break, of course, is over 155. That's why we're watching for that into blue sky territories, whole and half dollars, notably half dollars here on Apple, as it tends to like those areas. To the downside, not really looking for shorts. If we were to come back down and revisit this 151.19 area, that's sort of where this breakout stemmed from, correct? So if we do come down into it like this, I would be looking for a first touch buy reaction, watching for any hammer candles that print, indecision dojis, basically anything that would make you question, is this pullback coming to an end? Can we flip long over the highs and get back into some of these upside targets? So that should be a number on your chart. Anything really underneath 150, as we know that's the more psychological breakout point from in here. Anything back under that, I would be very skeptical of Apple. Probably look for it to come back down into the support trend line, which would again probably be a first touch buy, just based on the fact that we did set a new higher high here, and we would be pulling in to potentially form a new higher low as well off of that area. Keep in mind 50 SMA can coincide with it for a super support. That would be the icing on the cake. So Netflix, my goodness, leaving this one zoomed out, what a move that it had throughout the entire course of the week. And we actually were talking about this right in last week's video, that we were fairly bullish on this Netflix bull flag breakout. All things considered, we made a new all-time high. And given the nature and the distance that this move has already traveled, I would not be advising anyone chases price at this point in time. Whenever you see a large expansion of range like this, it's always wise to take out your Fibonacci's and just sort of analyze the move through this lens. Where's a healthy pullback? All the way down here at the 38.2, right? And it seems like it's so far away, but Netflix could really afford to do anything like this, spend any time in this area right here, and that would still be healthy and bullish for the chart. Now, ideally, it holds on to market structure, and we have two lows here at this 583.50 area, and we consolidate sideways here as maybe the Qs get some consolidation as well, and then it gets another leg higher. That would be ideal, but again, remembering that the 38.2 is somewhere in here, I would just argue prior structure at 565 should be the important number to monitor inside of Netflix. So again, don't chase it here. I would advise wait for some pullback, wait for some structure to build out, see what the next move could potentially be. Also not looking for a short, given how powerful this move has been here, especially on elevated volume. I wouldn't try to fight it too hard. Netflix being patient as the chart sits. So Tesla, on the other hand, has given us a nice little pattern here. Yet again, another little bull flag, something that looks like this. You can see that hammer from Friday is respecting the breakout point at 724.50. And of course, we knew that the upside target was 750. We never came all the way into it. So now just watching the set of three highs here to see if we can get a break up and through to fulfill that target at 750. We do still know that that's going to act as resistance, right? So anything over 741, we'll call it for round numbers sake, has about a $10 clearance overhead. And scrunching the chart up, you can see the next major point of contention would simply be cherry picking the high up around 780. So the chart still is bullish. We are getting price acceptance consolidation higher in this new uptrend that we've formed, right? So we're doing this. Higher low, higher high, higher low, higher high. So we can afford to see a pullback into a higher low. That could be a likely scenario, but the most bullish, of course, as we've discussed so far with many charts this week, is just price acceptance in this range. That would be bullish, looking for the break up and over 741 to get into some of those upside targets. Now, if we do get more of the rollover style thing, then again, remembering that the support trend line is probably going to be a first touch buy, simply remembering that we have a higher high, right? So high from in here, higher high, this would implicate that the support trend line is a first touch buy this time around for yet again another higher low. If it coincides here around 700 or 694 as super support, fantastic. We also have the moving averages, which are aligned with the support trend line right now. So pullbacks, again, still look favorable here inside of Tesla. All right, shield your eyes for Alibaba. This chart is still an absolute train wreck, but here are the levels that I would be paying attention to if you decide to trade this. Again, I'm really treating this as an intraday trader only, watching for early patterns to develop off of the bell, maybe in an imbalance from a gap up or down, and going from there. But structurally, note that the gap underneath us here is actually a double gap, right? So 166.17 down to 163.22 is a gap from here to here, but also from here to down here, right? So it's a double gap. I would expect that to fill relatively quickly, simply because, again, there's just really no structure in there that should provide some support. You can also think of this as a potential island reversal or lost baby candle reversal. I don't know what they technically call it these days, but regardless, the fact that we left this behind on a gap down, right? It should have went lower if that was truly strong selling. And now that we gapped up and over it, this is left behind. That could be the start of a reversal. So maybe watch out for some support here at the top of that gap. Again, all things considered, these are just some rough areas that I would keep an eye on. This upside gap does strike me as important if we can get back up there, simply because a strong sell reaction originated at the bottom end, 177.84. If tested again, maybe it fills to the upside, 181.47. So all things considered, do what you will with this chart. For me, it's an intraday trader only. Moving over to Facebook, this one has given us a phenomenal move and now a very reasonable pullback into the end of the week. What I really like about it is the fact that on Friday, this hammer candle printed right around this area of prior resistance. We know that was a prior all-time high, and we're starting to hold that as support. So we'll really see if that 375 is going to act as support and maybe we get a turn back higher. If you're a pullback buyer, fine, place your stop under here if we take out that high and retarget our 384 sort of all-time high right around in here. After that, looking for a higher high, right? That would simply be trend continuation. On any violation or strong close underneath 375, I would really place a lot of emphasis on this area here, right around 367, simply noting that that was the neckline of the double bottom, right? Something like this. Here's your double bottom, 1 and 2. There's your neckline right in here. Kind of needs to hold to be making forward and upward progress here inside of Facebook, and it would also still be a higher low, right, from the major perspective. So here's your major low. This technically is a higher low, and if we did pull back and were supported here, that would also be a higher low. So that would be the line in the sand to the downside. The pullback does look good as of right now. The market, again, being poised as a bullish thing. If it starts seeing upside continuation, I could easily see Facebook coming back in and revisiting those all-time highs. The last thing I'll make you aware of is, and I'm not going to draw this in with a hard line, but if you do something like this, it's extremely steep, but it is being respected as a support trend line. Wouldn't be the end of the world if it broke sideways through time, but again, just remembering we have a higher high here, pulling back into it, should be respected as a higher low. We'll see if we do get that upside move on the pullback into 375. NVIDIA giving us an interesting week, kind of, taking it all back with Friday, which brings me to a point of, this is a large engulfing candle, right? Huge momentum to the upside here, carrying or taking out the ranges essentially of 1, 2, 3, almost 4 prior days, right? It didn't quite take out that high in there, more of an equal high. But regardless, that's a lot of retracement to be doing after 4 days down, essentially. So looking for some more upside continuation as long as volume remains elevated. This has now put in a reasonable amount of time as a bull flag, right? Something like this. So if we were to get a break up and over these highs, it would be, again, just reasonable for more upside continuation. That break would have to be over these recent candle highs. Let's go ahead and map that in as, we'll call it 230 for round numbers sake. If we could get, there we go, 230 just about to the upside. Over that, blue sky territory is $1.5 intraday levels that do form inside of NVIDIA. The line in the sand to the downside is going to be here at this 219. Not so worried about this 215.24 anymore. If we were to take this out, which was the breakout area from in here, then I would argue it's likely we come back down all the way into 208.75, and I wouldn't be so worried again about that little hang-up point around 215, whatever it was, where we just removed. So line in the sand, 220-ish, we'll call it round number's sake. After that, 208 to the downside, and depending on time of week, that may be a super support here. That would be a pullback I would be willing to buy, simply due to the nature of setting a higher high, support trend, or 50 SMA support, horizontal support, just makes sense, right? So would be willing to give it a stab there, but for now, looking for the bull flag on the daily to play out as a move like this, boom, up and over the highs. Next, we have Microsoft, and this one's more interesting to me simply because we did not make a higher high, so you can note that this was a lower high than technically our all-time high, but we're still just kind of consolidating, getting some price acceptance after this large aggressive break to the upside. So rather choppy and not so initiative right now. I would probably be patient inside of Microsoft to the bull side and really wait for the 305.50 breakout into blue sky territories, as opposed to speculating long and just getting chopped around in this range. Now, don't get me wrong, swing trades that would be, the perspective for them. But scalping intraday trades, certainly intraday patterns do hold up here. Just noting that, again, there's no large amount of momentum right now. I would probably keep profit targets reasonable if you're scalping this one way or another. A kind of line in the sand that we can use here for, the most bullish outcome would simply be this area here, the 2-day, oops, I'm not sure what's going on there. The 2-day lows here from Thursday and Friday, you want to see respected at about 300. If it gives it up, I would argue there's room for it to chop down into this most recent low here around 296, and this isn't really so important anymore. That was a intraday breakout point, but really that low you would want to see hold at 296. So we'll call it 297. We'll round up there, and if it gives, right, that's again opening the door to probably lower into the 50 SMA and prior breakout point at 290. We'll call it. So for now, just treating it again with patience, really waiting to see the breakout up and over 305. We're looking for the breakout buy as opposed to the pullback buy as it just chops around sideways in this range. And I'm realizing that Microsoft was removed from our watch list, so I will put that in later. And last but not least, the beast, we have Amazon, and this one has seen some pretty impressive moves recently. In last week's video, we were talking about the potential for a inverted head and shoulders, something that would have looked more like this, right? And obviously it went early. It just did not put in a right shoulder at all, boom, right into the gap, and started seeing some acceptance inside of it. So all things considered, extremely bullish activity here, making a move all the way from the lows without any major pullback until the 50 SMA here. So what I'd like to do is just note, again, that we are getting price acceptance in the gap, and now is probably not the ideal time to chase it. I would really wait for this bull flag, if it's going to build out into a bull flag, to show some signs of where the obvious entry may be. In terms of where the pullback should hold, ideally it holds the bottom of the gap at 3390, but what I want to do is take out the Fibonacci's, just see if this coincides, and would you look at that? How beautiful of a thing is that? The 38.2 of this entire move happens to be 3390, so it would make sense to me that any further pullback should be met with support in here, looking for hammers to print, indecision dojis to print, anything that would make you question, is this pullback coming to an end? Can we flip long here and get back into the gap and really work our way back up towards the gap close at 3581? That would be how I could potentially see it unfolding as a more risk-friendly entry. Now, don't get me wrong, we're not going to just ignore this and let it, pass us by. If it starts taking out these highs here at 3512, there's potential that maybe this was enough consolidation, right? So a break here, again, still puts into play the gap fill area up at 3581, maybe still a bump in the road at 3550. Keep that in mind. But again, Amazon looking extremely strong here on the reversal off of the lows. If we trade underneath the gap low here, look for it to come back down into 3309, 3310. At that point in time, I'd really reevaluate what's going on with the 200 SMA and make a better decision once structure has built out. Quick reminder to hit that thumbs up button if you have not done so already, subscribe to the channel, all that jazz, and let's finish up with our 5 trade ideas. First one is going to be on AMC. Can you believe it? Someone like me looking at AMC, well, yes, it's true. I do see an opportunity here, just like we saw on GameStop in last week's video. A very similar pattern, and I do think because of the amount of eyes, I mean, look at the volume difference here, right? AMC has 52 million shares trading, whereas our next up, DocuSign, only has about 10 million, right? So all things considered, this is a viable trade idea, right? Just the more eyes, the better, the more technically it moves, so on and so forth. But what we're looking at here is a potential breakout up and over an area of known resistance. We have our resistance trend line coming in from up here, you can see, and we have 2 equal highs in more recent history. You can see those are here as well as right here, and we continue to form higher lows on the pullback. So I especially like the fact that on Thursday and Friday, we've printed 2 back-to-back hammers with equal highs, which is going to give us a very easy and obvious entry point over the top of 44.85, looking for the long to take us into 48. And after that, monitoring for a bigger breakout of this larger term pattern, something that would look like this, a bit of a flag, an ascending triangle, whatever you want to call it, over 48 to bring us into the next structure piece at 51.86. So all things considered, looking pretty solid here in AMC as a technically sound setup, right? We're not gunning at this as a potential short squeeze. We're not saying it has to go to 72. We're just looking for a very reasonable trade, given that it trades so much volume and the technical structure is in place. Not so interested in the trade and looking at stopping out if we take out those 2-day lows at 42.41. Place the stop just underneath that. If it does move lower, 40 should hold to remain bullish inside of AMC. Just, being more patient for the structure to set up for the next bullish trade if that does happen, a breakdown under those 2 lows. Next up, we'll take a look at DocuSign. DocuSign. And DocuSign is just simply looking for a big breakout of this range, which we have right here, right? So there's your range. You can see large green candle on earnings into Friday. We'll see if this momentum can carry us forward and we get any continuation into blue sky territories. Ideally, we hold on to the 38.2 pullback, which is, oh, actually, that's not it. We're going to zoom in a bit and retry that. So let's go in with our fibs. Here we go from low to high. 38.2 is there around 307, we'll call it for round numbers sake. So ideally that level holds, and if there is any consolidation, maybe an inside doji, it forms like that, perfect little resting bar, then looking for the break really up and over 315 into those blue skies and momentum to carry us on forward. Keep in mind volume wants to remain elevated on a specific trade like this with an earnings catalyst. So DocuSign looking bullish if we can get up and over that area of resistance. Not so interested in the trade. If we take out the 38.2 to the downside, I would really expect more chop inside of this area here at or around 300. Next trade idea is on DraftKings, and this is a bull flag. I know some people in the Discord have been chatting about this one, and to me, it's okay. The reason I say it's okay is simply because we had a breakout point from in here, and it was really met with a lackluster move, right? Twice we had a lackluster move, once and twice, and again, it's not the end of the world, simply noting that we are continually seeing higher lows on a candle-by-candle basis, so that is healthy, but it would have been nice to see follow-through immediately on the break of that pattern. Nothing wrong with still holding this one, but for me, the break I'm watching for is over these fake break highs here at 61.67 and looking left on the chart to see where our next major structure is. I would say this should be the target here at 64.31. After that, looking left, really emotional sell in that period of the chart. So I would say some clearance up to 73.26. Am I saying it gets there all in one day, all in 1 week even? Absolutely not. We're just monitoring for continuation if we get into 64.31 and things continue to move to the upside. Not so interested in the trade if we start breaking down underneath this support trend line, which might look something like that. I would just expect some more sideways consolidation at or around 60, the whole number. Next trade idea is going to be on Pinterest, and Pinterest is the beginnings of what we were looking at or wanted to look at inside of Amazon as this, right? So inverted head and shoulders, if this truly holds at 56, we'll call it for round numbers sake. The trade here would be a break over these highs to take us into this area here before filling the gap, right? So what that might look like through some levels would be price acceptance over 58, looking for the move into 60.89, we'll call it. Again, this is a pressure cooker top now with technically 4 touches to it. If that breaks, then look at the 50 SMA as a bump in the road, but ultimately gap to fill up towards 70.32. Again, does it happen all in one day, all in 1 week? Doesn't have to, probably won't, but just, again, monitoring for continuation if we move into the gap. Really liking that we printed a hammer on Friday off of a known area of support, scrunching this up. You can see that it acted as pivot low here, as well as pivot low there. Not so interested in this trade if we break down underneath 55.63. Next up, and lastly, we have JCI for Johnson Controls, and this is going to be a slower trade. I mean, look at the Y-axis on this thing. This is a $1 skew here, and you can see that the average range, as I hover my cursor here, is anywhere between 67 cents and about $1, $1 there. This was 89 cents, so on and so forth. So this is definitely a slower mover. And just because it's, a slower mover doesn't mean that it's not going to trade technically. It just means that your risk is probably going to be smaller and your reward is probably going to be smaller as well. But looking for a break of this bullish consolidation here at 75.41 into blue sky territories. And we, of course, want to see the low end hold here at 74.51. If it starts to give it up, it's not the end of the world, and you could actually be a bullish pullback buyer here, just like we discussed in SPY, because we did make a new higher high. If we were to pull back and do something like this, you can go fishing for your own support trend line and see what works best. But just note the strength of this uptrend here. Definitely looking for some upside continuation. As we know, we're looking for range doubling, and just based on a quick eyeball, that's about $1. So a dollar move should be available to the upside, and then monitoring for continuation. For me, just not interested in shorting it if we do break down underneath 74.51. Rather would look for the pullback buy at whatever support trend line you decide is important to you. Wouldn't really call for a full 50 SMA touch, but who knows what that would look like. So JCI, certainly some bullish consolidation and an extremely strong and healthy uptrend. Nice and slow mover for someone who maybe wants to get started with swing trading and doesn't want to see the P&L swing too much. So that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, certainly let me know down below in the comments section. Don't forget that we have Monday off as Labor Day, and all things considered, I wish you a green trading week.